West Texas Intermediate crude futures on Tuesday slipped below the $100 a barrel mark for the first time since 11th of May. It nearly fell 10% in intraday trade before recouping some of its loss. The sharp fall, according to oil watchers, came on the back of concerns that a global economic slowdown would ultimately dent demand. Meanwhile, Citi suggested that oil prices could drop to $65 a barrel by the end of 2022 and to $45 by the end of 2023 in case of a global recession and fall in demand. On the other hand, oil bulls see the prices surging despite a recession. Those at JP Morgan, for instance, see oil prices at $380 per barrel in a worst-case scenario if Russia starts cutting crude oil production in response to sanctions imposed on it. Christopher Wood, global head of equity strategy at Jefferies, also expects oil to hit $150 a barrel going ahead amid geopolitical concerns. One way oil can spike higher is escalation of the Ukraine conflict and a resulting decision by Europe to take concrete action to stop buying Russian energy. Such a risk has grown with the reports of atrocities committed by Russian forces and related allegations of war crimes. All of this makes it harder to negotiate a deal, he says. But to what extent is the oil market pricing in all these fears? And is the fall in oil prices temporary? Let's understand this better.
S&P Global Commodity Insights sees Dated Brent trading above $100 a barrel through to the end of the year. Now, you've still got a situation where you've had a lot of supply side risks around Russia, around where the extra barrels are coming to come from OPEC plus. But now the market is starting to bake in those recessionary risks. And so we've gone from a supply side risk scenario to demand side risk scenario. And that is helping to curb prices. But at the same time, the market is still tight. The product market is still tight. We see it around with jet and diesel and gasoline, and that has to be worked out. OPEC plus spare capacity is very tight at historical lows. There's only a little bit of wiggle room from Saudi Arabia and the UAE. So, and then you've got the Russia situation. Yes, the lost barrels haven't transpired as the market feared, but at some point, given that India and China have taken extra barrels, but at the same time, whether that continues is going to be harder and harder as the EU cranks up its pressure.
So, all this means that we will continue to pay higher prices for petrol and diesel for now, unless the government cuts excise duty on these two fuels. Technically, here are the key levels you need to watch on MCX crude that trades close to 7,800 rupee mark.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
तुम इतना डर गए?
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.